And banking changed somewhere along the way, probably in the 90s, and it became an industry that was doing business with itself. So it was Goldman doing business with a large hedge fund, and it was lending money very efficiently between each other, doing a lot of trading together. It wasn't really doing anything good for the mum and pop small business owner, which I think was a big shift. And then the global financial crisis came along, and the covers were ripped off this industry, and I think people started to see some of the stuff that was going on behind the scenes, and consumer trust in Wall Street just plummeted. Which again I think has been tremendous for entrepreneurs that now want to come into this space, because there's a real, certainly in the UK, the government have taken a real approach to removing red tape, removing regulations to allow small challenger banks, for example, to come in and actually challenge the status quo. And we broadly define it as looking at capital markets, looking at insurance, banking, lending and payments.
That's four.
It's probably, and banking, lending and banking and payments are probably the most mature. That's the one that everyone sort of immediately gravitates towards. Lending, obviously, increasingly with Lending Club and some of the alternative lenders that have emerged onto the scene over the last few years. And then wealth management, which is itself an enormous opportunity. We like to think of it as billion-dollar businesses operating in trillion-dollar market. In probably 2008, so pre-crisis, the global financial crisis, which, by the way, I think is the catalyst for everything that we're seeing today. Investment into fintech was, I don't know, $500-600 million a year, something like that. Last year it reached $15.5 billion. There's around 800 deals in there. So I think we can see that it's ramped, really quite substantially since the early days. 70 to 90 million Americans fell out of the formal banking system during the global financial crisis. Here in the US, there's 11 million undocumented people who live here in the US who really struggle to join or get access to certain financial products. And then if you move outside of the US, 42% of the adult population in the world is unbanked. And so I think there's a really interesting narrative, both here domestically and overseas, around the innovation that's being created, even here in this room, in this lab, that is going to do a lot of good and allow people who, for example, don't have the luxury of 30 days float on a credit card that we've enjoyed for the last 50 years. They don't have that.
So we try to do three things. Provide access to credit, provide merchants with easy ways to sell things in a digital economy, and then work on the resolution of financial transactions across borders and making it all very simple. And then I think one other thing that's just really interesting to mention, we have a thing called Ericsson Response, which is when there's an earthquake, hurricane, tornado, some kind of disaster happens. Ericsson brings in the communication technology to get those things up and running so humanitarian efforts can start, and so you can also find people in a disaster. But then we create a small emergency wallet so that people can start to the aid workers can then provide
pay for stuff.
The difference is that we're faced with now is over the last 10, 15, 20 years, startups largely needed a laptop at a desk in order to start a company. That's no longer the case with a data company, with an augmented reality company. You need access to tremendous computing power, tremendous technologies, and tremendous expertise. So
and money.
And money, sometimes.
Or at least capital.
But not much. That's the exciting thing,
much.
is that the cost of starting these businesses has collapsed dramatically. Even when I got into this industry in 1998, we built our own data center for $25 million just down the road. You can swipe a credit card now and have, you can spin up 20,000 machines, run a very complicated algorithm across it for 15 minutes and pay $50. It would be foolish as a thesis to say we're going to burn the industry to the ground and start again, because I do think, and again I made the point earlier, I think it's going to be a really interesting evolution as this thesis plays out over the next 10 to 15 years, of one where it's going to be sort of co-opetition. And there are going to be net new financial institutions that stand on their own 2 feet.